Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Rocket Lab, ticker symbol RKLB. And so here I am recording this on the morning of Thursday, April 4th, during market hours, and current price is just above $3.95, being up almost 2% so far on the day. And so the last time that I did put out a video was on March 22nd here at the end of this channel. And I had suggested during that video that Rocket Lab could be forming a bear flag and break to the downside. But then the week following that video, I started to have some doubts because it did seem to be consolidating here for a long period of time, and I thought it might be breaking to the upside with all of these wicks to the upside. But those wicks were suggesting that there were no buyers above this level of 417, marked by the low here hit on March 5th. And so, while we were getting some moves to the upside, they were not sustained, getting rejected from this level, and we did ultimately break below $4 a share on Tuesday, April 2nd, going down more than 5% on the day and hitting a low yesterday on the 3rd at $3.80. And so, following that video that I did put out, I was looking at the chart. I did have a small position in Rocket Lab, and I had not been exercising using stop losses. And so, what I decided to do following that video was I put a stop loss at 395 based on this low here that was hit on March 20th, thinking that, if price does go below that, hitting a new low, it's likely going lower. That's a good level to have a stop loss at. But I also recognize that if I do have a stop loss there, that will probably mark the bottom if my order's filled and I'll be left behind. Don't have a large position, didn't have a large position, so no big deal. I just need to get better at exercising those. And so what happened on the 2nd is that order was filled. We did break below 395. And, we did hit a low of 380. And so, I was just thinking that, I can't be spread so thin covering lots of stocks here on the channel. I can't be involved in all of them. And so I did cut my losses there. And what we do see now, I suspect that the bottom is in, not only because I sold my shares, but because we have not gotten a confirmation of this breakdown. And so what we did see on the 2nd was a low of $3.83.3. We did get a lower low the following day, but we did close higher, not only higher than the close that we hit on the 2nd, but higher than the low hit on that day. And so getting a close lower than that low would have confirmed the breakdown, suggesting that there would be a continuation to the downside. We did not see that, and now the low to the downside is $3.80. Confirmation would now be a close lower than that, and we're actually seeing a rebound today, now just being above $3.95. I suspect we will be reclaiming $4 soon, but if not, a key level to the downside that we'll want to keep our eyes on is this 1618 extension at a price of $3.82.7. That does look like it was support here, so let's hope it holds. And so if it does hold, what are some levels to the upside that we want to keep our eyes on for us to reclaim? And so one of those levels is, of course, $4 a share, just being a round, whole psychological number there. That is going to be a key one to reclaim. But we can also do some Fibonacci retracements to get an idea of where a price might be going. And so just coming from the high here, hit on the 28th, that was $4.23, coming down to the low of 380. All right, and so with that, if I do zoom in to the chart, we can see that the 382 does look like it is currently acting as resistance. That is at a price of $3.96.4. So hopefully, we're getting a close above that today. If we're not able to close above $4 a share, closing above $4.96.4, or really, 97 cents, that would be good. That would suggest that we are reclaiming these levels to the upside. But if we can't do that, the next level down is the 236. That is at a price of $3.90.1. Currently trading above that. Hopefully we are able to hold it. And because we did hit the low here yesterday, this consolidation could be bullish as it was following, this down move and then a move to the upside to consolidate. That could then be a, mini bull flag before we start to move higher to test $4 a share and potentially the 50% level at $4.01.5. So do look for that level as well. And then the levels to the upside would be the 618 at $4.06.6. But another thing that I can do, since we did see, this move from here at $4.72.5, I can actually adjust this Fibonacci retracement to that level. And so I'm just going to do that here, just adjusting the first point to $4.72.5. So, getting that level, even though I'm not retracing it back to this point, I am retracing it to that price. And so from that, we can see that it does look like $4 and right around 2 cents, $4.01.8 is that 236 level. So it would be great to be reclaiming that. And that also does correspond with the approximate open that was hit on the second when we had this big red candle. That was at a price of $4.03, that actually being the high on that day. So if we can reclaim $4.03, getting 2 closes above that, I do think that would look really good. And we could potentially start to see some upside, maybe potentially reclaiming this uptrending channel that I've drawn here that could coincide with testing the 618 here at $4.37 or the 786 at $4 and about 53 cents. So do keep an eye out for those levels if we are to reclaim $4.02 and take out these wick highs that were rejected previously from 417. That, of course, is going to be another key level. Resistance becomes support if we can get above it, so do look for that. But, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.